Hi there, welcome to Grain TV. It's Tuesday, February 9th. It was WASDE USDA report day. Let's take a look where the grain market closed. Corn was off 1.25 cents, beans up 1, and wheat off 1. Overall, it was a very neutral day, even though the report itself was somewhat bearish. We have been locked in this very narrow trading range and grinding lower here. The last few sessions today gave us no real spark or catalyst one way or the other. In financial markets, we did see the stock market continue to come under pressure, although by the end of the day we were actually in positive territory. Crude oil was off $1.50 a barrel at one point, although closing a little bit off of those lows. Everything overall continues to be fairly negative. Let's take a look at what USDA threw at us for new supply and demand numbers. In particular, let's look at U.S. ending stocks. And in that report, we saw corn and wheat coming in substantially higher than what we expected, although the increases are not hugely big for this time of year. But 1837 was the stocks estimate, basically lower exports as we had expected. Same story for wheat with lower exports as a result of the sluggish pace. So the news was overall just more of the same. Higher stocks, carryouts continue to increase. Let's change gears and talk about the world carryout. And in those numbers, we also saw higher stocks in wheat in particular, where India's consumption was curtailed. Chinese consumption was curtailed. That drew ending stocks of wheat up by a fairly substantial margin. On soybeans, ending stocks were higher as USDA ratcheted up Argentina's soybean crop by 1.5 million metric tons, so that increased the carry out there. Let's talk about wheat, where I think things are really starting to break down. If you look at the daily wheat chart on March, we are down at the lows that we set back in December, around that 456 mark. I'm worried that we're going to keep going lower as we get into the tail end of winter and as we get into spring. Historically, when we come out of a La Nina year like this year, we tend to have really good wheat yields because we have a wet spring. So I'm worried that we're going to see very sluggish exports because of our competitive problems that we have in the world market for wheat. And if you add on top of that a potential for a wet spring, I think wheat prices have the potential to keep moving lower as we get into April and May. So if you're a wheat producer, I think it's probably important to be looking at some hedging situations to protect yourself from a potential lower price as we get into the spring planting, or I'm sorry, in the spring situation as we come out of dormancy. If you have any questions, give us a call, 877-472-4607, or visit us online at grainhedge.com.